Alright guys, welcome back to my channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. So in today's video guys, I am going to be giving you guys this A plus setup that you can use to be able to become profitable. Right now guys, this A plus setup guys has literally helped me to pass my phase 1 challenge of my SIEG fund. Right, so as you can see on here on my dashboard guys, you can clearly see that the current equity right now on my account is 22,000. Right, so essentially my profit target was 10% and I was actually able to hit that on my first trade. So essentially guys, this strategy is basically 100% win rate. The only reason why this says 45% here is because guys, I do have to hit the profitable trading days. So essentially I have to make at least 0.5% for at least 5 different days. As you can see on here, I'm literally on my day, you know, I mean my last day basically, right? And as you can see guys, literally look at the three trades I took this week right here, right? And you know, on my previous video guys, literally when I was making my previous video, price was literally right here when I recorded this video. And as you can see guys, price ended up selling all the way down to my TP area, right guys? So I'm going to be breaking down this specific entry and how you can actually be able to learn this setup so you can pass your own prop challenge. Now guys, this specific model that I use to actually enter this trade guys is called the SDI stop loss model. And essentially guys, this is basically what it means, the SDI stop loss model. And essentially guys, this model consists of 3 steps. So the first step guys is understanding where the doji candle is formed, right? So the doji candle has to be formed in the area of interest. And then the second thing is now to wait for your entry, right? So in this case, it's going to be a shooting star. Now once you see that shooting star, then you enter your trade, and then the last step is now to place your stop loss under that doji candle, right? So in this specific case here guys, for me to break this trade down, all I have to do is basically rewind and show you guys exactly how I was able to actually take this trade, right? So essentially guys, what I do is this: I always look for the higher time frame bias first, right? So in this case here guys, if we go to the 1 hour time frame, after I delete this area of interest, you're going to see, right, that the daily time frame actually gave us an entry before. So before this move happened guys, the daily time frame actually gave us this entry right there. Boom. As you can see, this entry is called the Harami pattern here, right? And not just that too, you can see that price actually gave us like a sense of a higher low in this case here. So this basically looks like something like this. Boom, boom. This is basically what I was looking at in the daily time frame. So when I saw this guys, literally all I did was go to the 1 hour time frame and then first off identify the trend. So in this case here guys, the trend at this point was basically still bearish, right? So in this case here, price broke the previous low here, and then once it broke the previous low, as you can see, it closed below it and then it retraced to then now continue selling, right? So now in this case here guys, what I did was actually mark my area of interest, right? So my area of interest at this time was specifically here. So boom, right there was my area of interest, right? So I had this marked up as my area of interest. Boom. And then the next step guys was basically to wait for your session. So in this case, I think I took this trade around Asian session. Yeah, so the Asian session, right? So basically around the New York Open, or like the start of the week essentially, right? So if we fast forward, you're going to see that when price now bought all the way up here, right, you're going to notice guys, right, that there was also another area of interest right here. So boom, this was basically like another area of interest right here, like that. Boom. Now when it comes to using the SDI stop loss model guys, the first thing you have to do is wait for price to reach your area of interest. So in this case here, price reached our area of interest in this case. Now the next step guys is to identify your doji candle. So in this specific trade here guys, the doji candle that was given to us here was basically this doji candle on the left, which was this one right there. Boom, as you can see. So when this doji candle was already formed, all I then now did, where I mean, was basically wait for price to retrace into that area and then give me an entry. So in this case here guys, and my entry was basically going to be this shooting star pattern right here. Boom. So when price gave me this entry here, literally all I did was enter a sell and then stop loss above that box, as you can see, right? And then literally guys, the rest was history, right? So price came, it sold back down here, and then guys, notice how we are still following trend. And then in terms of my TP guys, my TP was basically going to be under here. Why? Because when it comes to, you know what I mean, where price wants to go to, I always anticipate that price wants to take out liquidity, right? So in this case here guys, a sign of liquidity is going to be your doji candles. So the first doji candle that we spotted was basically this one right here, right? And then the next doji candle was now this one right here. Boom. So this was basically it, and this basically has liquidity under them, right? So all I then now did was make sure I label them to know that there's liquidity there, and that's where price wants to actually go to. All right, so in this case here, when price created this low, same thing, guys. Like whenever you're trying to look for a re-entry, guys, just be patient, right? Because when price was here, guys, you would have probably be thinking, oh, like price is about to sink all the way down, but you have to still be patient because you can never know what price wants to actually do. So in this case, price came, sold. As you can see, it still sold, right? And then you're like, oh man, like I can't believe I missed this trade. Well, guess what, guys? Price still retraced to then now give you another entry. So in this case here, literally, guys, when price, you know what I mean, bought all the way up here, right? This was still the area of interest here. So if I move this down, you're going to see that price still reacted off that area there. Boom. So this was basically the original area of interest. And then price retraced to that area. And then guess what I did? I placed my entry on this specific candle. Stop loss was basically 32 pips. So I put my stop loss above the box right there, which is my area of interest. And then basically, guys, the rest was history, right? So I literally took my trade, guys, and literally when I took my trade, I woke up like around 7 a.m. and literally, guys, price literally hit my TP right there, as you can see, right? So basically right now what I'm looking for still is continuous sales. So with this specific trade, guys, I'm still in this trade in terms of still looking for sales, right? So right now, guys, with my SIG fund, I still have to hit, you know, I mean, one more day of profitability. But guys, I still have a good buffer. So I have $300 of buffer, right? So what I'm going to do is just risk $50 per trade and then easily catch a 1 to 2 risk reward. And then, you know, I mean, hit that target. Now in this case here, guys, I am still looking for sales, right? So notice how price came, took out the liquidity, broke, and then retested, right? Now the next area of interest I see is basically going to be this area of interest right here, right? So I do anticipate price will obviously go all the way down here to 195, right? But before it does that, it has to still react from this candle right here. Now in this specific trade, guys, literally, guys, it's literally the same thing, right? So I took my trade from this specific entry right here. So as you can see, price, it gave me this shooting star, right? When price, it gave me the shooting star, guys, literally, I didn't take my trade yet. I waited for price to go in a drawdown, right? So in this case here, my original entry was meant to be this candle right there, like this. But if you notice, in the next candle, price literally shot all the way up, as you can see. Almost took me out, as you can see, almost took me out, but it did not take me out, right? So if I was to do this, this is basically how my entry was. You see what I mean? So price almost took me out. I stand strong, or I basically, you know what I mean, held. And now I'm looking for price to sink all the way down to this level 196, right? So if I keep playing the market, this is basically where price is at currently right now. So as you can see, price is currently right here at the market close. But guys, I'm really not scared of anything. If anything, guys, the only thing I'm scared of is my spread. But my spread is like, I think I put my stop loss like right above somewhere here, right? But basically, guys, right now what I see is this, right? So I see two shooting stars, which indicates, you know what I mean, a sell, right? And then also, guys, I do see like this candle here. So this can be like a doji candle, quote unquote. So that means there's liquidity above this area and liquidity below this area. So I am anticipating that price will likely want to just sell, or obviously want to sell all the way down here. But if I do get stopped out, then it is what it is. But in terms of my markup right now, guys, if I was to remove this, I would say my markup would look something like this, right? So something like this. Boom. And then just make sure this is clear, right? So this is basically how I would mark up my charts in the 1 hour time frame with GJ, right? So something like this. So basically, guys, I'm looking to catch a 1 to 10 risk to reward. But yeah, this is basically, you know what I mean, the A+ setup, guys, that you have to wait for and will help you become profitable, right? But guys, if you do want to learn more about this specific SDI model setup, guys, I want you to click the link at the bottom of this video, guys, and put in your name and email, guys, and get this ebook. As you can see, guys, this ebook is a lot. It's basically like 4 or 5 years of all my experience put in like how many pages? 37 pages, right? So guys, I hope you guys gained a lot of value from this, and I hope you guys gained a lot from this video. If you have any comments, guys, comment down below. I will see you guys in the next video. Peace.